We've had 3 rate cuts by the Bank of Canada, but so far the response in the Canadian real estate market has been somewhat sluggish. We haven't seen a big turn up in home sales or prices. Let's get more from Phil Soper. He is the president and CEO at Royal LePage. Hi, Phil. Thanks very much for joining us. Are you disappointed that there hasn't been more of a response here to these cuts in borrowing costs?
Yeah, it's been sluggish, as you said. Now, I will say September was a different story than July to August, but 3 cuts. And if you look at previous changes in monetary policy, the market tends to react a little more quickly. So yeah, it's been slow. I hope to say slow and steady as we look forward to the fall.
And what is your prediction for the rest of this year and into spring?
Well, for all but our 2 largest cities, Vancouver and Toronto, we're already seeing some market increase in activity. In fact, I held my national conference out in Calgary the week before last, and after my opening keynote, some people were coming up and going, gosh, it's not slow where we are. And those tended to be people in Alberta, the prairies, Quebec, where activity levels picked up quite markedly. So, our numbers are skewed nationally by the size of the GTA and markets in the Lower Mainland, and they have been the laggards.
That's interesting. Yeah, it's tough. We've such a regional, like any country probably have such a regional housing market. We're looking at national home sales. Maybe, Control Room, if you could put that up once again. So it looks like the national, despite the growth in population, the rate of national home sales is still slightly down from where it was prior to the pandemic.
Yeah, if you look at the last 2 years, call it 26 months, we've been skating around 2008 levels. And on a population-adjusted level basis, that's really slow. Now, the interesting thing is home prices have hung in there. Even Toronto prices are up 0.7% last quarter, year over year. So the people aren't giving away their homes. They're just relatively not that many changing hands.
What about the government's measures to make it easier to take out mortgages? Or, for example, you can now get, or you will be able to get mortgage insurance on a home valued at $1.5 million. Will those changes make much of a difference?
It'll be material. If you look at our 64 city home price index, that's what you were quoting from, 12 cities are brought into play, if you will, where the medium detached home price is between $1 million and $1.5 million. Places like Victoria, BC, and Milton, Ontario, people either move up or first-time home buyers will be able to get mortgage insurance for what amounts to a basic single-family home. And that was one of the big challenges. Prices in Calgary are not prices in Toronto. So regulators have reacted, and I think it'll be a material bump in that space.
What about this thing? I mean, you note that millions of Canadians who did get super cheap fixed-rate mortgages when interest rates were near zero, they are facing higher borrowing costs. What effect will that have on the housing market when they have to, as they renew at a much higher interest rate?
Yeah, much less than some would lead you to believe. We're over halfway, considerably over halfway. We'll be 3/4 of mortgages written during those pandemic lows will have rolled into post-pandemic rates by the end of 24. And the default rate, those in trouble, call it 90 days or worse in arrears, remains one of the lowest in the world. The last numbers I saw were 0.19 of 1%. So people are hanging on to their homes. They are just doing what it takes. And of course, every 5 or 6 weeks, mortgage rates come down as the bank eases off that tight monetary policy, and the cushion becomes easier for people to handle. So I'm not expecting that to be a significant factor on the market in the year ahead.
What would you say to people who criticize the government's move, saying, well, extending mortgage insurance and amortizations just increases the buying power of borrowers and it's going to tend to push housing prices even higher? I know the real estate industry is happy enough, but that doesn't help affordability.
No, you're right. And typically, and I've been a critic of this in the past, these things tend to be political in nature. And often we see these measures introduced at exactly the wrong time when the market's already hot. I call it, pouring fuel on a fire. At least this introduction of a new policy making it easier for people to get into the market has some basis in logic. A lot of people who actually live in cities where the entry-level home just wasn't covered by mortgage insurance policy, and at a time when the market's very, very slow. So if you were going to introduce things that could stimulate demand when we have a structural housing shortage in this country, now is the time to do it. So I applaud the regulators for picking a down market rather than an exploding market to introduce a policy like this.
Phil, thank you very much indeed.
My pleasure as always.
Phil Soper, President